Hi, this is Sean Overton with OneStepRemove.com. In this video we're going to be discussing the idea of buying and holding an instrument instead of actively trading around it. I came across an academic paper and it's called A Quantitative Approach to Tactical Asset Allocation. Basically it means, should I continue buying and holding stuff or should I trade in and out of the position? And the author proposes a very simple strategy for doing the trading. You have a moving average, and if the price crosses above it and closes, then you buy. And whenever the price theoretically goes up and then crosses back under the moving average, you sell and you go to cash. The instruments he used for testing this strategy are basically equities indices. And I don't really have any interest in holding equities indices because I think they're a better measure of currency depreciation rather than company appreciation. But I did think, okay, well, one asset that I'm interested in holding over the long term is gold. So I wonder if this strategy might apply to gold because, as everybody knows, the last 15, 20 years has been an insane bull market in gold. So I went ahead and I programmed the strategy in NinjaTrader and looked at the results, and I found that it's just abysmal. So it does make money, but it only makes about a third, no, not even a third, about a sixth of what the total return is from if you just buy and hold gold. And the reason for that is that it's eliminating half the opportunity, and even if you're only going long, it only captured a tiny fraction of what was available. So I went through the results and I figured out that by waiting for the prices to close above the moving average, most of the move is actually happening from the drift within the moving average. So by waiting for the price to close and then to close back down, what you've effectively eliminated is the ability to capture all that space in between. When you go through and you do the test and you say, am I better buying and holding versus actively trading, the result is that you are far better off buying and holding, not just because of the trading outcome, but then you factor in real world stuff like taxes, commissions, etc. So if you are planning to take a buy and hold approach and you wanted to consider this strategy, you should not. But if you want to download the source code and tinker with it and see how I came to this conclusion, you can find it at www.onestepremove.com. My name is Sean Overton. Thank you for listening.